Welcome back to the Generational Investors Podcast, where we explore the timeless principles of building lasting wealth. I'm your host, John Woodard III. And this week we have our, once again, favored guest, Mr. John Woodard, my father, president and founder of Woodard & Company. And this week we are diving into oil, or as people up north, I guess, would say, oil. And the reason why we're talking about this is just with all the conflict system that have been going on in Iran recently, the closing of the Strait of Hormuz, there is a lot going on and a lot to talk about. And oil has just really been about the most volatile it's ever been in the past few weeks. And we're approaching the end of the third week here of the conflict. And it looks like things are just shaping up to be more and more interesting. So just get started here. We'll just go into talking a little bit about why oil is so important and what really drives it and what's going on currently in the markets. And so just to begin, oil is in so many products. It's in a daily use, and if it's not in the products, it's in the transportation of those products. It's how the vehicles or boats move products from one thing to another. Some interesting things is around 60% of the clothing in the world has polyester in it, which is an oil-derived product. And on top of that, there's things like toothpaste that a lot of it's derived from oil, which that's something to be kind of a little concerned about because that's going in your mouth. But plastics, fertilizers, chemicals, tires, asphalt, about most anything you can think of. Actually, 60 to 65% of global oil demand is tied to transportation. So that shows why it's just transporting everything, getting products here and there.
Like you're saying, the soles of your shoes, probably your shoelaces, your socks. If depending on what you're wearing, your pants, your underwear, your shirt. The label on your tie. Just going up, just about everything somewhere, and then to get it to the stores, to provide the power to manufacture the goods you're wearing. Takes energy, and then you're shipping it to the store. It takes energy from the diesel from the. So yeah, it is. And you said something interesting. We were talking earlier. The cost of a barrel of oil. I think you said $19.
Yes,
do that number. That was interesting.
So actually, petrochemicals that are derived from oil and gasoline are used in about over 6,000 everyday products, and in a 42-gallon barrel of oil, not only 19 gallons of it is actually used for gasoline, and the rest is used for those everyday products. And so the majority, when you think of gasoline or oil, you're thinking of it just going in cars and whatnot, but really over half of it in a given barrel is being used for the everyday products. That just shows it's all across the board. And so relating everything here is 20% of the world's oil comes through the Strait of Hormuz. Some of it's from Iran, also other ones are, the other countries that share, like the UAE, Qatar, they also import and export out through that Strait of Hormuz. And Iran's been the only country, really, other than a few exceptions, such as India got one or two tankers through, but Iran's been the only country that's truly been able to export most of their oil out, and 80% of their oil goes straight to China. So it's been causing a rough cycle right now in the markets, just with oil and everything. It's causing spikes, and that also will cause shocks to inflation short term. And that just causes issues. And just one thing I'd like to clarify too, typically people will be seeing two different types of oil being traded for futures. One of them is WTI crude oil, and that is Western Texas Intermediate, and that's more American based. And so that's why if you see it slightly cheaper than Brent crude oil, then that's a more global oil version. And they're refined in slightly different ways, and Brent's more easily transported just because it's more global and everything, and the way they process and store it's different. But those are the two that
I think the Brent's more refined to start with. It requires less processing. Mm-hmm. The West Texas crude is a little more, but also if you look at the price of oil, like I said, the morning recently where it hit $119 a barrel. That was for, I think, the May contracts. The December contracts were still in the $70 a barrel range because we know it's going to go down. You can look at oil that spiked in the first Gulf War when Iraq had taken over Kuwait, and then after that, and I can't remember what it got to. I think it seemed like it got to $70, $80 a barrel. but after that it went to $22 a barrel. But one of the contributors for current oil pricing and has been a contributor in recent years is in 1978 Jimmy Carter. We'd had all these gas lines and stuff. I mean, we'd had shortages of oil, shortages of gasoline, and we would like fill up our cars on if odd days and this kind of thing. It was really crazy, but he stopped the export of oil, but you say, well, that sounds like a good idea, but what in effect it did was it let OPEC, oil producing countries like Saudi Arabia, control oil prices. So when Trump came in, he changed that. So by 2020, we are the world's leading producer of oil. I think we have the largest net proved reserves. I see differing numbers on that. Sometimes other countries, but we've got a lot of oil, and so you can look at it. Say, wow, this is scary. We get oil in the Middle East and so forth, but we can, to a large extent, we can control these oil prices because we are the leading exporter. And so you could see after this a resolution here, and the resolution could come in the very near term because of our dominance. You could see oil dropping to $40 a barrel very, very quickly, and you could see us paying under $2 a gallon at the pumps, and you could see that by August, September, and I wouldn't be surprised. You got midterm elections coming up.
That's definitely a driving factor why they would want to get it done quickly.
Be very influential, and since you can look at OPEC and what they've done in Russia. And whenever we've had economic difficulties in the United States, like the tech wreck in 2000 or the dot-com bust, but you could also look in the 2008 with the mortgage bust. They'll get in there, and like I say, in March of 2008, they ran oil to $150 a barrel, the highest I've ever seen. And our enemies tried to and at that time we couldn't export oil. But we can now, and they can't control. The OPEC can no longer control and tank our economies, and a lot of those countries are not our friends, unfortunately. And so, by being able to export oil, we can influence the price dramatically. So you will see almost certainly, in my opinion, a resolution to this action in Iran. You're going to see oil prices, have the glide path of a brick, drop like a rock.
That's something good. Ever since 2020, actually, we've been a net exporter of oil, and that's something that's not been seen since at least 1949.
Yeah,
which is good for us, just in many different ways.
Good point.
And is there anything else you'd like to touch specifically on historicals, any of the events like in the 70s, or you mentioned the Gulf War in the early 90s?
Yeah. I'm old enough to remember sitting in line waiting for gasoline and when OPEC, when the price of oil was controlled by, of course we weren't drilling like we are now and everything, but when oil, I think in 72, oil was $5 a barrel. It wasn't financially profitable, and I'm not sure what the break even now is in the U.S. to drill oil. It's still, I've seen the numbers on the Middle East, but their break even, they've been doing it since Aramco, since the U.S. went in and developed their oil fields just after World War II. Their cost of production is pretty much the cheapest in the world, understandably. They got cheap labor. They got, they've been doing it since, for 80, 90 years. Our cost of production, because of technology, is controlled as well and goes down. And so, the horizontal fracking and all the different ways they can extract more and more, we we own the LNG, liquid natural gas market to a large extent, and we are the leading exporter. So look for oil prices to go down.
That's good. And that's actually 2 points I'd like to point on is about liquid natural gas. I know we're more talking about oil, but recently, as of, I believe last night, it was Israel attacked one of the biggest oil fields or natural gas fields for Iran, the South Pars, and Trump also said that if Iran had more attacks, he'll wipe out that whole thing. But that caused Iran to retaliate and attack one of the largest, or I think it was the largest natural gas plant in all or reserves in all the world in Qatar, and that caused a spike of natural gas prices go up 35% in a single day in Europe. And so this is going to help maybe America's natural gas, LNG, everything go forward, just because, I mean, they're going to be running thin, and Europe's been relying on Russia and the Middle East and everything, and this is going to cause a little bit of change.
For many years, natural gas was a waste, almost a waste byproduct of oil drilling, and they didn't use that much of it. But what they found is almost all of our gains and as far as pollution and so forth have been made by the conversion to natural gas, because it's very clean burning, and it's very so it's kind of changed the dynamics of that. But you have I think LNG. Our LNG here in this country, our natural gas is what $3.50 or less per 1,000 cubic feet. The same stuff is exported to Europe is like $12 per 1,000 cubic feet. So those spreads, talking with some analysts and experts, say will probably start to close, and we've seen ours go up. We're going to see eventually. I think we're going to see LNG go down, and we're going to be the world's leading supplier of. But it has to be shipped. It's, I think, like 200 degrees below
for it
zero.
to stay in liquid form, unlike oil that can just be shipped in liquid form at room temperature.
Exactly. And I was talking to an analyst one time. They said, these ships come in Boston Harbor, and they're filled with LNG. He said snipers go up on the roof to guard these ships. He said you got the basic, almost an atom bomb sitting there. I mean, things need to be changed, I think.
Yes.
But indeed, the it's a very clean fluid. It's very clean. It's just that it has to be liquefied to be shipped, and that's a problem.
That's what's causing an issue for us, just because.
And it's not easy to get something, I guess, 200 degrees below zero to liquefy it. It's a gas, and I guess So anyway,
it's interesting. I don't know how they'd figure out how to do it that low temperature and everything, but that's wild. But I just one last thing I'd like to round out statistic wise about historicals is there's been 6 different oil crises since the 70s there, and 5 of the 6 have resulted in recession. But right now, one of our favorite economists, Edgar Denny, was doing some statistical research, and he was showing that now, these days, the U.S. economy requires significantly less energy output per unit of GDP than it ever has in earlier decades, and also it is a less of a share of the individual consumer's personal consumption expenditures than almost ever before. And so that's something that it's going to hit the consumer less.
And also critically, and we've said it before and I'll say it again, our ability to export oil means that OPEC can't hold us hostage with oil prices. That we could, by having the ability to export, we can dump oil on the markets. Like I said, UAE and these other countries right now, they've shut production because they can't ship with Hormuz. But they've shut production because all their storage facilities are full to the brim. There's plenty of oil. It's just temporary. And
that's a good thing.
And the temporary nature of it means, when this is resolved,
it's going to pass.
Oil prices are going down because OPEC, Russia can't hold us hostage. Russia, I guess their next biggest shipment's vodka, and it hardly holds a candle to oil. I mean, oil is their biggest, about the only thing that floats their economy and keeps them going. They're the war machine and everything else. So.
That's good. That's good for the American economy and everything. And actually, since the war began, apart from China, the U.S. markets have been the best performer. Yep. And I think one reason China has been one of the top performers is, one, they just continued their oil flow from Iran because Iran's been able to get their ships through. And so China's just been kind of going as normal. Anyway, so a few questions here to go through. We kind of talked about how oil shocks can lead to economic stress just with how influential it is. But can you dive a little bit further into how oil trades, specifically just for the average listener public?
Yeah, you've got folks who have oil demands like the airlines that or like UPS or FedEx, their biggest expense, their biggest cost is energy to ship stuff, and so they're going to be hedging their positions in the oil futures market. So right now they're probably they may have bought long contracts, seeing the crisis right now we're seeing in Iran, but they may have a spread where they're selling the December contracts. So I mean, the futures market is, and a lot of folks, a lot of institutional investors anticipating supply and demand and trying to manage their earnings so they're not beat to death by sudden spikes in oil prices. But then you've just got you got seasonal demand. Like right now we're coming to the end of winter, so fuel oil will drop down, but we're heading into summer, so gasoline will start to go up. But we're kind of in the in between part. So you'll typically, this is kind of a good time if you're going to do it, I guess. You get a little dip in oil prices historically, although I don't think we're seeing a dip right now. But used to be the trade was short fuel oil, long gasoline in March.
Okay.
And then in the fall, but so many do it. You get a lot of the goodie out of it because people pile into the arbitrage. Yeah, the arbitrage there. And then you've got just regular. We know what regular demand, supply and demand is. It's that's fairly constant, and the crisis will end when OPEC control and OPEC. A lot of the OPEC countries didn't like us, and you got Russia that didn't like us at all, and they didn't mind running oil prices up and keeping them up, and they you could see Saudi Arabia when they during the Biden administration, unfairly, they would I would watch, and this is my opinion. I think they would cut production to make oil prices go up and to try to hurt him. I mean, I think I see these things that OPEC, it'd be nice if they're our friends, but they're going to go with what they, so a lot of things affect the price of oil, but demand is fairly constant. And the usage, you make shingles for the house, you make, shirts or whatever it is you make, just about everything, paving for the road. Right now, nitrogen. I was talking to the guy at Farm Supply at Nutrien, and he said I think nitrogen has increased. It went from $640 per ton to $820 in the last 2 weeks. Now, phosphate has dropped down, potash has dropped down, but nitrogen has gone up like 30%.
I'm assuming it's because a lot of the exporters.
Oil, it's involved with the production of oil, urea, and so forth with oil production.
And fertilizer in general, actually, a lot of it's exported out of the Middle East there through the Strait of Hormuz.
Well, the nitrogen component, yeah.
Okay.
Actually, potash, I think, is eastern North Carolina. I mean, you got it comes to different things, but there's also sulfur, and there's a limited sulfur's through the roof too. There's a limited number. I think there's 3 places you can get sulfur. So that's limited as well.
Interesting.
And that's a component of fertilizer. So, and we're at the spring season, and this is where people plant. And demand for fertilizer for, like I say, potash. I think potash is down like 5%, but say nitrogen's up 30.
It's bad time for farmers in America.
Oh yeah.
Just to round things out here, do you have any closing remarks or anything you'd like to just conclude on about oil, maybe about how investors should be thinking about energy exposure in this current environment, anything of that sort?
Yeah, keep your car filled up with gas. Now, it's temporary. It'll be over sooner than, there's a midterm coming up. Oil prices are going to come. They're going to fall like a rock, in my opinion. I don't know. I don't have any inside information, but that would be what my expectations are. And so I think this is temporary. When you go back and you look at the oil crisis of the 70s, it went on for years and years and years, finally ending in an inflationary bust in the early 80s. This is not that kind of thing. This is a short-term event. And so if there's the Fed talking about raising rates because of the inflationary pressures from oil, I think it's absurd. They're not going to do it. This is temporary. I think they know this is temporary, and we'll get through it.
Great, I agree. And so, just to round things up, before I get to John's pick of the week, just a friendly reminder that if you're listening here, we want to hear from you for any questions you may have or podcast topics. Please just send any of those requests to podcast@WCAMG.com through email. And so to round up this week, we have my pick of the week this week is running. Not the essence of running. I think it's something good for individuals to clear their heads, get general fitness. It's good for cardio. And when I'm talking about this, I'm talking about running, 2 to 5 miles typically.
Walking too.
Walking. Well, I think I'm going to leave a whole other segment on walking in the future, because walking in itself, I think, is one of the best things a human can do.
I used to be a runner, but I'm a walker now.
But, well, walking's the best anyways. Yeah. I mean, it's the least impact on your joints and keeps you moving. I mean, it's natural. But anyway, so running's just, it's very good, especially for people that are, in their younger ages. I believe it's something good just to help clear your mind and get things going through. But there are definitely limits as per anything. You like to eat, but you shouldn't be eating, cake every day. You like to run, but you shouldn't be running, 20 miles every single day.
Can I say what you're doing this weekend?
Yes, I guess that's one of the reasons why it's fitting for.
So if you want to, like, what you shouldn't do is he'll be an example. He's doing the Badwater race Saturday down on Ballhead Island. It's a 50-mile race. It takes, you got to do it in under 14 hours, but that means you got to do 3 to 4 miles an hour pace or better to get there. So
you can't be walking all the time.
Good for your joints? I don't think so.
No, but it's a one and done deal.
Good for what? I'm not sure. You'll see a lot of beach. They run from the square there in Ballhead Island, which is on the southern tip of North Carolina, between the Cape Fear and the Atlantic, all the way up. The Army Corps of Engineers filled in that gap. Waterway gap between the north part of Ballhead Island and Wrightsville Beach, which is Wilmington, and the water was flushing sand into Cape Fear, and of course they had to keep dredging it for transportation. So you can actually run all the way from Ballhead up to Wilmington, or heck, you could run, I guess, to Canada if you wanted to. So anyway, so now it's what's that stretch? 19 miles.
Yeah, down and back, it's 19 miles.
Yeah, and
so
you'll do that twice, and then
all the way up to Fort Fisher. That's
yeah.
So I get a cool belt buckle if I complete it. So.
Oh man, I know. Why am I not doing it? I have no idea. I must be crazy.
It'll be perfect to be thrown in the drawer after I finish.
Or somebody must be crazy. Okay.
Yeah, but that's what the long distance runners. It is like it can cause gastrointestinal issues and whatnot if you really press yourself. But I think one other thing is just it causes dehydration. So if you're not being properly fueled and hydrated for it, then that's what really causes issues. But anyways, but running is just something good that whether it's half a mile, a couple miles, it's good to just
aerobic exercise is good for the body. Just like weightlifting and everything else. Yeah. Exercise is good.
And it trains the most important muscle of your body, the heart.
Yep.
So anyway, so with that said, that rounds up this week's podcast. As always, we thank you for listening and like to finish with our motto: always buy quality and diversify. The information provided in this podcast is for educational and informational purposes only. It does not constitute investment advice or recommendation to buy or sell securities or an offer or solicitation of advisory services. It does not take into account your individual financial situation, objectives, or needs. Investments involve risk, including the potential loss of principal, and past performance is no guarantee of future results. Woodard & Company Asset Management Group is a registered investment advisor with the SEC. Please consult your financial advisor or tax professional before making any investment decisions.